It's hard to imagine that just 2 months ago, experts were forecasting a positive outlook for the aviation sector. Now the International Air Transport Association says that instead of passenger numbers growing by 4.1%, they will drop by 4.8% for the year. Some have warned that the current coronavirus outbreak could cost the airline industry nearly $30 billion. That's much bigger than the impact from the SARS outbreak in 2003.
SARS at that point in time was big in Asia, but it really didn't touch anything in North America or Europe, which didn't have ties to Asia at that point in time. Also, China was much smaller at that point in time in terms of the footprint, in terms of the outbound visitor numbers and so on. So what we're seeing now is SARS plus. It's bigger, it's more systemic because we're seeing impacts in Europe now within sort of intra-European travel, and certainly in Asia, also in Korea, and to a small extent Japan as well. So definitely impact's going to be bigger.
Airlines have responded by cutting capacity, cancelling flights to affected regions, in particular China, and even asking their staff to take unpaid leave. But are these measures enough?
Demand has just basically evaporated in some markets, and in other markets has declined by over 50%. So they have to quickly adjust by reducing capacity, temporarily reducing staff levels, because you don't want to necessarily furlough workers because you do hope there will be a recovery once this passes. So the easiest thing to do is to try to do voluntary leave and try to incentivize employees to take some time off unpaid while the reduced flying is occurring. But a lot of costs in the airline industry are fixed, so you cannot reduce your cost as much as you're reducing as much as your revenue has been reduced in this case.
You have a situation where airlines will have these aircraft and there's really nowhere for them to fly. And the only way that airlines really make money with an aircraft is when it's in the air, full of passengers, flying routes. When it's sitting on the ground, it's losing money. It's a very expensive thing to have on your hands. So if you have all this aircraft sitting around idle, it's very difficult for the airlines. You still have your crew to pay. You still have your slots at the airports. You still have a lot of expenses associated with this operation. So it's essential to keep things going. Cash is the lifeblood of airlines.
As the virus spreads to more countries and fear puts people off from flying, experts say things will likely get worse before they get better.
You'll just see more widespread cuts in more markets and deeper cuts. I think it's time that some of the Asian airlines react faster and more strongly to what's happening. I think they've been a little bit slow actually in reacting.
However, experts do applaud SIA's decision to have its CEO and senior management take a pay cut, as this signals to their staff that the whole company is united during this difficult time. They believe airlines will hold off on retrenchments and only as a last resort.
The rebound could be very fast, and you don't want to be caught off guard when that happens. People will, go on those business meetings that they didn't attend because of this situation. Conferences and events that were canceled because of this might be held, and then of course people will be flocking to the airlines and booking hotel rooms and so forth again. So there could be a massive uptick once the cycle turns, but the question is we don't know when that is going to happen, and it's fair. That's what makes this such a difficult situation for airline CEOs, because there's so much uncertainty.
Another fear is that the wider global economy is now being affected. The US Federal Reserve just surprised pundits by cutting interest rates by 50 basis points, the first emergency reduction since the 2008 global financial crisis. And stock markets continue to plunge on fears of the virus.
What we saw in SARS was mainly a health issue, and as soon as that subsided, businesses were running, factories were ready to produce, so there was no reason underlying that beyond the SARS scare to really stop the traffic. And if what we're seeing is that we're continuing for the next few months, is that the Chinese factories are still not going back to production, people are still not spending, there's a dramatic change in sort of consumption behavior, then we're going to see some significant knock-on effect in the economy. So if people are getting less income and so on, there's less propensity for them to travel.
Experts do agree that one of the lasting impacts of the virus could be a consolidation within the airline sector as they struggle to stay afloat. Earlier this week, South Korean budget carrier Jeju Air just acquired a majority stake in their competitor, East Star Jet.
Asia is overdue for consolidation, but the issue is that the governments often bail out the airlines rather than pull the plug on the airlines. And what happens in this situation, these kind of situations, is that a bailout is more likely because the airlines that are really struggling have an excuse, and the governments come in and come in with another rescue package. While if this didn't happen, some of these airlines would have struggled to get the money from the governments that they really needed, and these airlines were struggling already because of the overcapacity in Asia. So on one side of the coin, some people would argue, yes, you should see consolidation, but on the other side of the coin, I would say that you could actually see more government bailouts of airlines.